A new stock I've been buying recently, okay, is Disney. I literally just started a position in this, and it's going exactly as planned, already down 6%, okay? It's always my, it's what I always hope for, okay? As soon as I buy, the shares go down. That usually means it's going to be a winner long term. I get worried when I make money right off the bat. When the stock goes up right away, I start questioning. I'm like, well, something's going wrong here, okay? But in all seriousness, Disney, okay? So when it comes to Disney, I mean, gosh, okay? I don't even know where to start with this one. First thing is, they just announced they're doing their big layoffs, okay? And the layoffs are coming, the 7,000 job layoffs, right? First round's about to start here. No, Bob Iger's back at the company, right? And he basically hasn't been the CEO of this company over the past few years. Bob Iger was the CEO for a long time for this company. From about 2005 to 2020, he was the CEO of this company and did a phenomenal job growing Disney. Stock price did amazing. Revenue did amazing. Net income did amazing. Look at everything across the board, okay? Great job by him, right? He's back now. No, right now this company's valuation, it's trading as low as it was in Rona. It's trading as low as it was in 2016. Okay, the stock's been heavily discounted. I mean, extremely discounted. And Bob Iger has now obviously taken back over as CEO of this company, right? No, when he stepped away, it was a very questionable time, I gotta say. He stepped away February of 2020. It was a very strange time to step away. Why? Well, because at this time, basically, Rona was already a huge thing in China. We were still trying to figure out in the United States of like, what's going on with this Rona thing? Is it serious? Is it not serious, right? We didn't start taking it serious till March of 2020. So he stepped down in February 2020. And there was, if I recall, Shanghai and Hong Kong, they were already shut down at this particular time. And so I think he likely saw that and he's like, this is going to be a mess for the next couple of years. I don't want to be CEO. I don't know. Okay, that's just my hunch. Maybe it had nothing to do with that. But it was a very suspicious time to step down as CEO, okay? And so he got to avoid that whole wave. Now he's back as CEO, right? He's going to right-size the company again. He knows his business inside and out. He's going to right-size the company. He's going to cut costs massively. Don't be surprised if their net income goes through the moon over this next few years, right? Parks are 100% open, full capacity, full go around the world again, right? Obviously, he's got their content business heading in the right direction again. So the way I look at this is this is a perfect situation for him where he's going to be able to step in, get the company this year fixed, and then it's going to be off to the races over the next few years, and he's going to be seen as, a visionary, a perfect CEO again, right? And it's going to be a very similar phenomenon that we've seen with other folks like Starbucks CEO Howard Schultz done this in the past. Steve Jobs obviously did this. Steve Jobs was a little different situation, though, because he was kind of forced out of the company, and when he came back, Apple was almost done. Like, Apple was almost in bankruptcy. Disney's certainly not in that situation, right? But you see this sometimes where these CEOs that were respected, then for whatever reason they leave the company, then the company goes on hard times, they come back, they right-size the company, they get the strategies all right, and they fix the day, and they save the day, right? And then they're hailed as visionaries. And so that's my opinion what's going to happen with Bob Iger here. And when in regards to Bob Iger, he's supposedly supposed to only be CEO for the next 2 years. My opinion is I think he's going to be CEO for like the next 5 years, okay? Here's the deal. This is a hard year for them, right? This is 2023 is going to be the year of, having to cut a bunch of jobs, having to cut costs. Oh man, it's so hard. We're trying to right-size the company, doing all this. This is like the hard work year, they call it, right? And then 2024 starts the real growth again, not just in terms of top line, bottom line, everything across the board for this company. Things get a lot better for the business. Stock price starts appreciating greatly. And next thing you know, he starts getting all the praise, stock options. It's a beautiful deal. And so in my opinion, is he really going to leave when things are just starting to get good for the company? I don't think so. I think he's going to want to stay around at least a few more years. So I really think he's going to be in this for about 5 years. That's my personal opinion on it. And so at the end of the day, when I think about a company like Disney, right, and I think about they own the whole freaking world, okay? I don't know what else to say to you, okay? They own the whole world, okay? It's incredible when you really look at how many assets this company really owns. I mean, my gosh, it's incredible. And so when I look at their business model and I look at Bob Iger coming in, right-sizing the company now, getting focused around profitability and margins on every single business, I think he's going to accomplish this in 2023, and I think it's going to be off to the races in 2024. And so I want to be positioned in the stock when we're at multi-year lows, when we're going through all the job cuts and we're going through all the dramatic time, because that's when I'm going to get the lowest shares. I'm not going to get a great deal in the stock when everything's going great again. I'm not going to get a great deal in the stock next year, in my opinion. I'm not going to get a great deal in the stock in 2025. I can tell you that. By that time, the stock's probably going to be $150 or $200. That's my personal opinion on that. And so I need to position into this year, get ahead of that, and beat Wall Street to the punch. Because they'll start piling on as the quarters get better at the very end of 2023, and then as we kind of go along in 2024. So I need to start positioning now when we're at multi-year lows rather than wait on this, okay? And, in terms of acquisitions, I don't think they'll pull off something like this year. But I wouldn't be surprised if they try to make a move on Fubo next year. And with my understanding of Disney and with my understanding of Fubo also, right, I think it's definitely a possibility. We'll see what happens there. But my opinion on this is Fubo is the number one streaming player when it comes to sports-related content. We know Disney owns ESPN. And so I just feel like this is a perfect acquisition target next year for Disney. Fubo's one of those companies that it's like they're still not talking about profitability until maybe like 2025, so it's like way out there, right? But they got incredible user growth, and they've got an incredible revenue growth at this company. And so it just seems like a match made in heaven for Disney to go ahead and acquire a company like this or make a substantial investment. But I think, honestly, Disney would like to just buy a company like this and just expand it. So we'll see what happens there. But that's kind of my opinion on that. Estow. Planning on buying some Estow in the month of April 2023 here. Okay, so 3x, it's basically a 3x leverage against the Dow Jones Industrial Average. And this is a hedge for me, essentially. So it's basically a way I can hedge my portfolio. So if the market tanks for any reason, let's say over the next few months, next 3 months, 6 months, 9 months, something like that, I can obviously make money on this, and quite a substantial amount of money, especially if the Dow Jones Industrial Average was, let's say, go down in a pretty short amount of time and do it very, very quickly. That would be a pretty immense move. Now, in terms of Estow, it's not always a perfect correlation between a 3x of whatever the Dow Jones Industrial Average. Sometimes it's better than that. Sometimes it's worse than that. It all depends on many various factors, okay, in terms of how that works. No, there's an insane divergence that's basically going on this year between the NASDAQ and the Dow Jones Industrial Average. And the NASDAQ's having a great year, okay? Having a great year this year. Well, the Dow Jones Industrial Average is actually down this year. And this is an interesting divergence, and this is, for anybody that follows my channel knows I called this out essentially at the end of 2022, and I said, like, this is not going to last. There's been a huge divergence between these, and at the end of the day, like, the NASDAQ going to end up way outperforming the Dow, and it's exactly what's happened. And the reason I had so much conviction to make a call like that is what happened last year was so unnatural. There was a huge divergence between the Dow Jones Industrial Average and the NASDAQ. Such an insane amount. I mean, we're talking about over 20 plus percentage points. That never happens. I mean, usually you're looking at a 3 to 7 percentage point difference in divergence between the Dow Jones Industrial Average and the NASDAQ. And so to see a 20 plus percentage, I mean, this was like 25 percentage points at one point. It was so unnatural, folks. That doesn't happen. And so at the end of the day, I looked at it and I said, okay, a lot of Dow stocks have been hiding out money. I think a lot of those stocks are overvalued, and this divergence cannot continue. They're going to start to correlate more in line, and sure enough, that's what's happened here now at this point in time, okay? Now, if, let's say, hypothetically, the market was to tank, okay? Let's say over the next 6 months, okay, everybody freaks out again. Let's say, I don't know, inflation's way stickier than people have thought, and then they're afraid of the Fed, and they're afraid of recession, whatever, okay? So let's just say the market tanks, okay? What I could tell you will happen in that scenario is the NASDAQ will fall, and the NASDAQ will go down to just a slight gainer for the year. But what will happen to the Dow is the Dow will fall 10 to 20%, okay? And it will be negative 10 to 20% on the year. If there was a scenario where the market tanked, let's say over the next 6 months in a hypothetical situation, well, the NASDAQ will still likely be up for the year. Okay, so that's an interesting kind of thing that could happen definitely in the market this year that I see playing out. And so Estow, a nice hedge for me. You know, do you need to have a hedge on if you're a newer investor to the market? Probably not. I didn't have a hedge on for a long time. at this point in time, my portfolios are obviously, pretty large in size and whatnot. And so I like to hedge a little bit now at this point in time, okay? Especially in uncertain times, like obviously we're going through, and we're going to have to see what happens with the economy and whatnot, just in case, just in case the stuff hits the fan, as they say. What I do with an SDAO in call options on SDAO and stuff like that is, if we had any sort of major tank in the market, whenever that would be transpiring, that's when I'd be looking to basically reposition out of those, take profits on those, and then reposition into longs at that point in time. And then I would go ahead and basically re-hedge at the very end of this year, essentially. So let's say hypothetically over the summer, market's tanking, it's getting ugly, okay? At that point in time, I go ahead and take all those profits, go ahead and funnel it into long positions at likely very low prices, let's say, right in the summertime or in the fall time or something like that, and then go ahead and re-hedge. Doesn't mean I'll re-hedge back into SDAO, it could be something different at that point in time, but that would be at the end of the year at that point in time, if I was to do something like that, okay? And so just to kind of run you through my thought process on how all that works, okay? Alrighty, so that's SDAO up there.